The 19th of October 1987. The market crashes 22.6%. Paul, a floor trader, picks up a phone and saves his fortune. October 2026. Same crash. You click sell on your phone and lose everything while a loading screen blinks. What changed? They removed the humans, replaced them with algorithms programmed to steal your money at the speed of light. And the craziest part, the theft is legal. It's in the code, right now. Renaissance Technologies knows. JPMorgan knows. They're already programming their escape, while you're being programmed as the victim. Let me show you the heist they're planning, the weapon they built, and why the protection they sold you is actually the trap. You think you can sell your stocks anytime you want, right? Click a button. Money appears in your account. That's how it works in normal times. But here's the question they don't want you asking. What happens when everyone clicks sell at the same time? In 1987, that question had an answer. Floor traders picked up phones, negotiated prices, slowed the panic. Human friction saved the market from hitting zero, but they called that friction a problem. So they fixed it. They removed every human between your sell order and execution. They replaced them with machines that execute in nanoseconds, and programmed those machines with one instruction: get out first. You think you're trading against other investors. You're not. You're trading against algorithms designed to front-run your panic. And in 2026, when the next crash hits, those algorithms will execute the largest wealth transfer in history, from your account to theirs, in the time it takes your screen to refresh. The crime scene. Here's what they built. The weapon. 70% of all stock trading is now algorithmic. Not humans using computers. Autonomous machines executing millions of trades per second. The average trade happens in 0.000000001 seconds. In 1987, 60 seconds. That's 10 billion times faster. But speed isn't the crime. The crime is what they programmed the machines to do. Cascade selling. When one algorithm detects trouble and sells, it moves prices. Other algorithms detect that movement and sell, which triggers more algorithms. A chain reaction executing at the speed of light. The accomplice. After 1987, they installed circuit breakers, trading halts at 7%, 13%, and 20% declines. They sold this as protection. If markets fall too fast, we pause. Let cooler heads prevail. That's the con. Circuit breakers don't stop algorithms. They concentrate them. When trading halts, algorithms don't cancel their sell orders. They queue them. Millions of orders stacking during the 15-minute pause. When trading resumes, they execute simultaneously in the first microsecond. The circuit breaker creates a dam. And when that dam breaks, the flood is catastrophic. The victims, your 401k, your index funds, your retirement account, all programmed to exit last. The evidence. You want proof? Follow the money. Follow what the criminals are doing right now. August 2024. JPMorgan internal memo requires trading desks to hold higher cash reserves, not announced publicly. Just an internal adjustment. Why? Their risk models detected something. October 2024. Renaissance Technologies, the most sophisticated quant fund on earth, reduces equity exposure by 40%. They don't announce this as a crash prediction. They call it positioning for volatility. Translation: their algorithms are programming the exit. November 2024. Multiple high-frequency trading firms quietly update their crash protocols. They remember 2010's flash crash. They know the next one will be worse, so they're programming their machines to get out faster. Before yours. December 2024. Treasury market liquidity deteriorates. The safest asset in the world is becoming harder to trade quickly. This is the pattern before every crash. Liquidity disappears right when you need it most. The smart money isn't warning you. They're programming their escape while telling you on television to stay the course and think long term. Remember Paul the floor trader in 1987 who picked up the phone and survived? Here's what they don't tell you about that story. He didn't survive because he was smart. He survived because the system still had human override switches. Your system doesn't. When you click sell during the next crash, here's what actually happens. Your order enters a queue, behind millions of other orders, behind institutional algorithms that execute in nanoseconds, behind high-frequency traders with servers located physically next to the exchange to gain microsecond advantages. By the time your order reaches the front of that queue, the algorithms have already front-run you. The price you saw when you clicked sell? Gone. The algorithms took it. What's left is the scraps. This isn't a market crash. This is a programmed heist. And you're not the trader. You're the mark. The execution. Let me show you exactly how the crime executes in 2026. Hour 1. A major bank reports unexpected losses. The market drops 3%. Algorithmic risk models detect the decline. Systematic selling begins across thousands of institutional accounts simultaneously. The market drops 7% in 15 minutes. The first circuit breaker halts trading. During that 15-minute halt, algorithms analyze the situation. News feeds, volatility indicators, correlation patterns. They're not panicking. They're calculating. And they're queuing sell orders. Millions of them. Hour 2. Trading resumes. Every queued order executes in the first microsecond. The market drops 6% in 90 seconds. Second circuit breaker at 13%. Another halt. More queuing. Index funds mechanically rebalance. Leveraged ETFs amplify the selling. Options dealers hedge by selling more. All algorithmic. All automatic. All front-running you. Hour 3. Trading resumes. The market crashes through 20%. Third circuit breaker, market closed for the day. But it's too late. Your retirement account is down 30%. Your sell order, still pending. The algorithms already took your money and front-ran your panic at the speed of light. You watch a loading screen while machines execute the largest wealth transfer in history. From your account to theirs. Legally, automatically, unstoppably. Back to October 1987. That trader survived with a phone call because humans controlled the system. The floor traders, the specialists, the market makers. They could slow down, negotiate. They could stop the cascade before it reached zero. In 2026, when you reach for your phone, there's no human on the other end, just code. Code that's already executed its exit strategy before you finished reading the notification. The criminals didn't rob you with guns. They robbed you with math, programmed into every circuit breaker, every index fund, every algorithmic trading system. The heist is already coded. The getaway is already planned. And the protection they sold you, those circuit breakers, is actually the vault door slamming shut. Renaissance Technologies has already positioned for this. JPMorgan has already adjusted. The treasury market is already breaking. The insiders are already out, while you're being told the economy is strong. Valuations are justified. This time is different. It's never different. The pattern repeats. The only question is, will you be the trader who picked up the phone in 1987, or will you be staring at a loading screen in 2026 while algorithms steal your retirement? The crime is programmed. The weapon is deployed. The execution date is set. And by the time you see processing your request flash on your screen, the heist is already over. They removed the humans, not to make markets more efficient, to remove the only thing standing between them and your money, the ability to say no. The choice is yours. But the timeline is closing, because in 1987, humans controlled the kill switch. In 2026, the machines control you. If you liked this video, you need to watch this. Discover how 5 economies collapsed, foreshadowing the fall of the American dollar.